Yo, 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 what is up, people? Welcome back to the Kevinarchi channel. And on the previous video, I went over the potential price target and pivot point of Bitcoin, and it looks like we have arrived at the rebound zone. Rebound zone is the 0618 of the area, and something that I also noticed, here you go, 0618 to 065, it's actually a little bit higher than that, a bit more exact. Yeah. And we've rejected from that area exactly. However, does that mean the price won't break up from here? It's not necessary that the price does go down and takes out these lows. I do tend to believe that the overall correction may be over, possibly, right? And there's more ranging action that occurs here. And something that I've noticed as well, funnily enough, from I believe 2 or 3 videos back, I was saying that this corrective period would last for approximately 2 weeks, seven days to 14 days. And that's sort of where we've arrived at before we pivoted up to the rebound zone. So I don't think I'm, the most intelligent, smartest, woke trader in the world. However, I'm just applying a bit of, sense, which is common, and applying it to my analysis. In terms of how alts are looking, I stated previously as well that we're probably not going to take out the lows for alts and range in the area, and that's exactly what we've done. So Bitcoin did end up breaking its own lows, but altcoins have maintained the lows here. So as you can see the line up here, Bitcoin did take out its low, but altcoins remain strong, and that is because the BTC dominance chart is on the reversal. So from the rebound zone area as well that we find on the Bitcoin dominance, we have reversed, which is nice. Hopefully this music isn't too loud and is relaxing. Let's go to tether dominance and my previous theory that tether dominance often goes to 1 before any major move up. And that is potentially still on the table, right? Until we break this high this low for tether dominance, this level to touch is still on the table. So taking out the lows again for Bitcoin is still on the table, but also going higher for Bitcoin is on the table. But should it go higher, right? What target are we looking for next? I would say tether dominance goes down to the 3.2 to 3.15 area, right? Like this. And that potentially marks the March top for Bitcoin before bad things happen. Right. Something that I'd also like to go over and might be helpful for you guys. We've been looking at a lot of macro swings and stuff, but in terms of actionable, steps and analyzing the market from a more data-driven perspective, I think it's worth getting yourself a tradinglite membership. And what it has are something called heatmaps. And what are heatmaps? Heatmaps essentially are the order book for particular exchanges that you can see here. I've got a bunch of Bitcoin listed on different exchanges because each book is different, right? This doesn't give the aggregated order book across all exchanges. I don't know why everything has disappeared here, it may be glitched out due to some graphics card issues whilst recording my screen. But let me go over this one quickly because it is showing up. Actually, I'm going to go to the Bitfinex heat map because it has relevant data that I think we can analyze and draw some conclusions from for a potential pullback. Right. As this loads, why do we have multiple exchanges to be looking at? As I said, the order books are different across the board, and some exchanges might have more resistance at a certain area or support than others. And sometimes you might have the same resistance or support levels on 2 exchanges or 3 exchanges, but not on the others. And they're sort of random in the sense where you need to do your own scans on these levels. How do you use these heat maps to make decisions on your trades? For example, if you go to this level here for Bitcoin, the price retraces into these orders, right? And these are people bidding for Bitcoin. And when there is not enough sell pressure to go further, perhaps the orders here have absorbed the selling, the price will go up, right? It's either the price has been absorbed there, or there are whales that have a specific edge that know that the price will pivot from around this area, and they want to spread out their orders, getting an average entry without putting in a larger order, which may not get filled, and the price pivots before it gets them into that trade, right? So now that I've explained that, I want to go back to Binance coin margin. So it's the margined version of Bitcoin on Binance. So pretty much futures, if I'm not mistaken. And I want to use a very specific example here to kind of get your mind into when you can execute a trade, or when the edge really exists to be entering a trade, right? And this is using simple tools such as obviously the heat maps, the candles. I won't go too much into clusters, and that could be a topic from a different video, but let me go to the level that was extremely, I guess, tradable, because it presented a very, very, very good opportunity where there was a lot of support, and this was at a bottom as well. And I can utilize my actual indicator to give context and how you draw conclusions with confluence. Hopefully the chart loads for me all the way. What is all this garboza on my chart? Load, load, load. If you guys have stuck around so far, Jesus Christ, your attention spans are excellent. Cool. Oh, and at the top here, you can see that you can adjust the actual order sizes that are visible on the heat map. So you can see the number change up here, and yellow marks any orders at 450 BTC for the order or above. Cool. Let's delete this for now. And perhaps I will turn on regular candles so it's easier to see. Perfect. Cool. I wish I could use the 30-minute chart, or actually even better, the 5-minute chart, but I would have to reset this entire thing. However, firstly, let's go back to Bitcoin. If we establish that we have edge on a certain time frame, in this case Bitcoin on the 3-hour time frame, and another reason why I think maybe that was the bottom for Bitcoin is that we have actually bounced from the indicator level on my 3-hour indicator. So that was a very good area to be watching for that bounce. But let's go to, actually, let's use the Coinbase chart. A bit more reliable from my experience. Perfect. So, if you guys don't know what my indicator is, I've mentioned it previously in other videos. It's a projection of a certain fib on the chart, and in a lot of instances in a bull market, it's a leading indicator that marks out potential major macro pivots that give you edge cases that have, a risk side of maybe -1% and upsides of 20 to hundreds of percent, right? And should the price action go to this level, in the case that we're watching on the trading light chart, like this, it gives you context on when to use the heat maps, right? And should large orders of Bitcoin in the amounts of 500 to 600 to 700 lines of orders be within the vicinity of the indicator, there is a point of confluence where there is genuine support at the level, as well as probabilistic pivots that might occur due to an edge case that you have quantified previously, right? Now, in terms of execution, how will we go about looking at this level to get the best order, right? And something that you will find a lot in the market is the price action tends to stab down one time, 2 times, and then a 3rd time. So you will enter the first time, it will stop you out. You enter the second time, maybe up here higher, and it will stop you out. And by the 3rd time, you would have given up potentially, right? I would encourage people to wait until the 3rd drive down. And once that 3rd drive down occurs, you can actually look at the volume profile, right? This is actually a pretty average example, but nevertheless, it is an example that demonstrates what I'm trying to express here, whereby large drives down into support, meaning the price action is being sold into bidders. However, with each drive down into these bids, there is less selling pressure. That means the actual volume is not increasing despite going into very, very large orders. What does that mean? That means should the price go down even further, it would need more volume. However, it isn't quite there, and you're assuming that the volume isn't returning, and what's going to happen is more buyers start stepping in because there isn't enough pressure, selling pressure, to bypass the rest of these large walls. And in this circumstance, it's a very, very specific case where there are extremely, extremely large orders. I don't know why it's not showing me these orders anymore, but let's assume all of these are 500 BTC orders, diminishing volume in terms of the sell side, and you have an edge case where the actual indicator is marking 38.8 3.87, right? I'm just going to be quite exact with that. And the downside here is just around 1%, a bit less than 1%, right? 3.887. 3.887. So around here, right? Once this drive down occurs and there's a reclaim on the right side, potentially that might be a good place to enter, or deviations below that 3.887 level at, well, in this circumstance, well, here it is, up to 1% down, because we've established that with this edge, should it be the correct, well, if the actual trade is going to be a positive trade, then the deviation below that we should expect is approximately 1%, and you might give that a little bit of breathing room, and add another 0.5% on, right? So your stop loss might be down at 3.8.2, right? So any trade that you add here, you can actually size a little bit more with your stop loss all the way down here. If the trade is being entered up here, you'll be applying the same amount of risk with that stop, or once that low is established and that volume has diminished and it looks like the price is pivoting, your stops will be below this absolute low here. And the size of your trade should be according to how much you're willing to lose on that trade, right? In this circumstance, we're looking at a trade that happens extremely rarely. The actual factors here are extremely rare, whereby how many times does this 3-hour signal occur within, let's say, from the September period to March period of the next year, right? I don't know how many months that is, like 1, 2, 3, 4. It's like 6 months, right? You're getting 1, 2 of these signals in 6 months. So if you're sure that's going to induce a massive pivot where the price action appreciates quite substantially, you can't see the right side of this chart. However, you do understand that in a bullish market, there's a high opportunity for at least 20-ish%, right? In this circumstance, I believe there was around 17%. In this circumstance, there was 90%, right? And on leverage, it can be a powerful tool. Well, to what I've just shown, to put on size and understand that there is a specific amount that you're going to lose, but also it allows you to size a little bit larger with more conviction, right? So hopefully that didn't go over everybody's head. I tried to keep that as simple as possible. Where is Bitcoin going to go now? I don't know. Hopefully you guys have enjoyed the video, but oh yeah, sorry. I'm pretty sure the markets will be going up for Q1. If there's more corrections this month, they'll probably be resolved into February. Hopefully you guys have enjoyed the video. If you want more educational content, please let me know. Otherwise, I'll just stick to my market analytics. Peace.